Well, hello, traders and investors. I'm L.A. Little, and this is your daily NeoTA wrap. We take a look at these markets, doing it from a neoclassical perspective each time, looking at the markets and asking ourselves what happened today. What does it tell us about the coming ones? I do a show 4 times a week, every Monday through Thursday. It's broadcast at or before 10 o'clock Eastern Time, archived on YouTube. It's under the channel L.A. Little. Want to subscribe? Reach up in the right-hand corner and do so. Anytime content's pushed, you'll get a notification. Also do a weekly show on Sunday evenings. Always good to get a broader perspective, and that's what we do on that show. As far as today, it was up, and away one more time. The winner has to go to Janet Yellen, as she does her best impression of a money tree. All the indexes. Russell in particular, 2.67%. This was a fly back into all those things that worked to start the year. Commodities in general, that was because Yellen came out as dovish as could be. All the hawks have been talking, squawking, I should say, over the last week and a half since the Fed meeting about how rates were going to have to rise, blah, blah, blah. Well, Yellen came out, threw cold water on it, said, forget it, The global economy is not going to allow it, therefore we're probably not going to do it. And so that sent the dollar down, and I've been talking about the dollar is going to drop near term, right? Go test those lows that I've showed you before, and we'll look at them again. But that also pushed commodities and materials, basic materials. All those things have been popping. Got them going again. Reversed. It didn't reverse oil, but actually pushed oil back higher. It was down up almost 4% at one point. But the problem with that, when you're doing this and you're pushing all of this up, you're doing what? You're pushing the dollar down, and let's find the dollar, down 1%, right? Dollar's going to go after the lows of that big range now on the weekly. We'll turn to that next. As it does that, what happens? The yen goes up. The euro goes up. The whatever currency out there is, the won, whatever, right? They go up. And what does that do? That pushes pressure back on those markets, equities, to go down. And so you can't have it both ways. If you're going to push the U.S. dollar down, you're going to push the other, I was going to say ETFs. You're going to push the other currencies, whether it's ETFs, Forex, actually, really. You're going to push them back the other way. And that's going to make it harder for those equity markets to actually participate as the U.S. market is. So let's turn our attention to the currencies, because you have to have your head in the sand not to realize that this is what's pushing everything around now. I talked about this currency was, a matter of fact, I wrote an article. I shorted up here, right? I wrote an article and said that I was short the dollar, but I talked about longer term, the dollar is going to try to press higher, not lower. But there was a short-term trade, Market Watch. A couple people called me on it. It's like, you're talking about the dollar's going higher, but you're short. Well, it's like there's a short-term trade here, right? Why is there a short-term trade? Well, if you look at the weekly, we already talked about this once. You got a big high volume low down here, right? In this area here, big high volume low. That's at the bottom of a range. If you pull over the monthly and take a look at it, right? You've got a range down in this area, and it's going to try to test that bottom of that range now, and that's what it's been setting up to do. And so I'd be very surprised if we don't see it come down here and try to test that low, test this big bar up, right? And then at that point, flip around and head back the other way. And that's because, as we get farther out in time, it's going to take a while, but we get farther out in time, maybe over here somewhere a couple months, the dollar is going to drift higher against these currencies. But in the meantime, party time, right? Yellen pushes them down, pushes the dollar down, pushes all the other currencies up, and you can take a quick look at them. Here's the euro going after the highs now. You got the Swiss doing the same thing. That's going to hurt all these markets. Japan, same thing's going to hurt the Japanese market as that one tries to push up. And so you can't have both sides of it. Either you're going to hurt Europe, or you're going to hurt Asia, or you're going to hurt the U.S. And it's just dependent, it's just a question which one you want to hurt. Of course, that puts juice into everything else commodity-wise. Gold stocks fly higher again. Volume comes in again, 123 million shares, pushing up towards the highs again. Now remember the angle of ascent here. Let's go back and review, one of the primary things we've talked about for a while. The angle of ascent was not sustainable. I mean, that angle just isn't sustainable. You're going to revert to the mean at some point. You can either do it by correcting in time or in price or both, and that's what this is doing. It's almost a 45-degree angle as we go across in time, right? As we go across in time here, we get a 45-degree angle begin to form, and that's going to allow this thing to go higher. If you look at this on any time frame, folks, this market is slowly building, right, to go take out swing point highs. And if you look at it on a monthly, to break over this bearish retest regen and this swing point high. That's on the stocks. If you look at gold itself, doing the same thing, right? Gold itself had a big spike higher, pushes up, right, and then does a vertical spike. And what does it do now? It goes across in time. So rather than having this, this tremendous spike like this, now you have something that looks more like a 45-degree angle, which says you can take off again, right? That's how you congest. That's how you digest. That's how you make the next move. Here it is on a weekly. Again, fairly unsustainable on a weekly time frame, so that will have to work off more at some point, and a pretty nice move going on the monthly as well. So, you look at what has worked the first 2 months, that's what's starting to work again, or the first 2.5 months now. That's what's starting to work again. And that's courtesy of our friend the Fed as they continue to push this market around as they move the rates up and down. Let's look at the equity markets because we actually had something I didn't expect this week, at least so far, and that is as a push higher. S&P 500 top here is 2056. You get to 2057, I think it was 2055, 2056 as well. So you're closing right at that little bump high consolidation. It's going to try to get over it. Now here, your angle of ascent really hasn't had a chance to stop. If you go from here and you go straight up, it's really not 45 degrees as we were seeing elsewhere, right? You don't have that kind of angle of ascent here. Instead, you've got something much more difficult to sustain. And I still suspect, and as I've talked about before, both Sunday and last night, this over-under suggests you are going to try to work sideways at best, down at worst. Right now, you're trying to push up again. We'll see by the end of the week if they can actually press it higher or not. I think it's going to be difficult, but you know what? This market's been extremely bullish, and it's very hard to stop a bullish market once it gets going. NASDAQ gets over the high. Now remember, the NASDAQ's been trailing, so the angle of ascent here is not nearly as steep as what you just saw on the S&P 500. Steep still, yes, but is the angle as acute as it was over there? No, it's not. And they get the push up, and it's the same thing on the NDX. A little volume coming back in today. NDX blows over the top. Finally, we go to the Russell. This was the one that really took off today. We had a consolidation. Now, the Russell was the first one to try and consolidate after the angle of ascent here was extremely high, right? Remember how acute that one was? Well, what does it do? It works sideways, works it off, right? Gets the breakout today. And if you look at that angle now, right, it doesn't look nearly as bad, right, in terms of where it was. Although, of course, tonight now we've got a little steeper one. But still, you can see the point. You work it sideways long enough, right, then you can take off again. And that's what they're trying to do. It's going against the call on the two-bar reversal. Of course, that was a weekly, so we'll see by the end of the week if they can actually keep this thing going higher. As I said, I think it's going to be difficult. And why is it going to be difficult? Well, it's not going to be difficult because of our markets. It's going to be difficult because of overseas markets if they can't somehow find a way to juice these. I'm going to start with the DAX. Right? The DAX is still playing with the Draghi bar, still sitting there, can't get going. Hasn't given it up much, but certainly can't get off its dime and get rolling again. If we look at the CACs, right? The CACs Draghi bars here got underneath this back in it today, but again, you can't seem to get any kind of real advance going. If you look at Asia, Asia struggled as well, right? The Hong Kong, yeah, they've had a nice run as well, but they're struggling to get higher. If we look at the Nikkei, same sort of thing. I think they will continue to struggle more. If you're going to see anything happen on the positive side, it's probably going to be in Asia more so than in Europe. And if you look at something like Switzerland, Switzerland is going to continue to carry the anchor of the Swiss franc around their neck, and they're not going to be able to get much higher. It's going to be a struggle for them. So it's going to be the overseas markets that put a damper on the domestic markets in terms of equities, and the things that are going to run are the things that did run, which is exactly what I told members this weekend here in the communications on the weekend broadcast. I do this broadcast each week, pull it up, and the members themselves can take a look at what's going on. And it's a broadcast, 15, 20 minutes usually is what I try to keep it to. All the archives are here. Of course, I did tell them dollar going to try to trade lower. That's going to push your commodities up. That's where you want to be focused if this market tries to continue. And if you looked at what happened today, you had a wild day in those commodity markets again today. That's it for tonight, folks. Tomorrow is Wednesday, then Thursday, so you got a couple more days in the end of the quarter here. They're not going to give up this end of the quarter. It doesn't look like it's going to be a struggle to get them to push it down. They're going to try to just hang it now, right? You've made the recovery. You've come back from 10%, 12% down to 0 to 4%, and so you're in a range now that you can explain it to your investors. They're going to try to hold it there the next couple of days and probably will do a pretty good job of it, my guess is. So you'll get that sideways week at best, probably the way it has now shaped up, courtesy of Miss Yellen. Have a great night. Thanks for joining me. Take care, and I'll see you next time. Good night.